Welcome back to the Watch List, live from the Schwab Impact Conference, where we're ready to talk about some of the hot trends in trading. And now, time to discuss the increasing prevalence of options trading. And we welcome in some pros. Our special guests are with us here today, and we're happy to have with us Devin Anderson, co-founder, CEO of Convexitas, and also Zed Francis, co-founder, CIO, with us as well. Zed Francis, Convexitas, and Devin Anderson, Convexitas as well. Great to see you both. Thank you so much for being with us. So Devin, I'll start with you. We were just talking about the excitement that we've been seeing in options trading that we did not see 5 or 10 years ago. What's going on?
So I'm, even as someone that's founded an options business, when I walk around Schwab Impact, I'm kind of impressed at the amount of engagement around options usage, and it really makes me very bullish on the space and our products. I will say though that I think if I were an advisor, I'd have a really tough time deciphering this world, right? Schwab's giving presentations about self-implementing strategies. There are managers here, there are ETF sponsors here, all kind of in this option space. And I feel like the volume around all of it actually really rallies like the AI excitement. So, one thing that makes us, it gives us a lot of excitement about our world, but also, we're here to educate and really try and help investors understand, when do I use these different tools? How do I interact and approach with this space, right?
And it's interesting because you're co-founders of the firm, and we were saying that it used to be buy low, sell high, or buy and hold. Now I hear more and more, you can't trade without trading options. Is that a theme that you're hearing, Zed? And what are you telling folks? Because there are some risks and there are rewards. Tell us about that.
Yeah, no, I mean, it's gone from a little niche thing to, over the last 2 years, it's almost mandatory to at least have a little bit of knowledge of how to utilize options in portfolios. They're not appropriate everywhere, but you actually have to be educated to make that decision. Should this be in there or not? And ultimately, to distill it a bit, option style strategies fall into like 3 main categories. We'll say number 1, hedging, taking down risk of current exposure.
Right.
Number 2, leverage, increasing exposure in certain areas using options. And finally, number 3, kind of like fixed income replacement, derivative income products. Like, how do we use options to create distributions? But like, in each of those categories, there's very important kind of do's and don'ts and things to think about for your specific client portfolio, and especially taxes.
And when we think about what's going on in this you talked about 3 ideas, very general categories, but we can get into them more because there is risk involved, but there's also a risk reducing strategy too, right, Devin?
Sure. So one of the most common use cases is to manage risk, right? And when you think about how to begin that research as an advisor, we kind of think about it in 2 broad buckets. If you truly can take a position and do a collar or self-implement some trade and stick it in a drawer and not touch it for a year and be okay with that, truly, by all means, like you should do that. It'd be very efficient, right? But the reality is most of our clients, and I think most advisors, are accountable to their clients, and they're accountable on a much kind of more frequent basis, and they need an active risk management. And this is where managers like us and some of these ETF products start to come in. So that's when you need to start looking at, should I be allocating to a fund? Should I be talking to an SMA manager like Convexitas?
And you mentioned derivative income strategies. Tell me a little more about that part of it.
Yeah, so I mean, it's definitely exploded as a category. And I would say one of the main things when reviewing derivative income style strategies is making sure that the actual income you're receiving is new capital, not distributing your current capital back to you. So ultimately, underlying that is you need the strategy from a total return perspective to actually make enough money to support those distributions. And a lot of the fanfare of late has been created by the fact that the distribution amounts are very, very elevated, but ultimately the total return of the strategy is less than those distributions. So the ETF, or mostly ETFs, are actually just giving you your own money back. So it's confusing to the end client where, hey, there's these really big numbers. Why are we not looking at this ETF to replace traditional fixed income exposure? You're like, well, let's look under the hood. Let's make sure it's actually creating new value to create those distributions.
I think about the days where they talk about options volume and it was a record day, and we have those from time to time. And not that long ago, there was a Friday a few weeks ago that we had such heavy options volume trading. What does that tell you, either pro or con? Because it gives you a glimpse into how people are positioning too, right?
So it tells you that more people are using options.
That's true.
That's the only thing I can tell you definitively. I'll tell you as a professional and someone that used to have a very active role running a structuring desk and an active role in a strategy group at a bank, it's very hard to take that volume apart and say what it means, right? You have to segment it up, you have to make a lot of assumptions. I mean, I think there are definitely some trends that we can say for sure. The short dated, what Zed's talking about, the short dated derivative income trend, particularly, it's now kind of coming into the 0 day and very short expiry world, undoubtedly that's grown the most. Retail use of very short dated options, 1-2 day expiry options for directional trading yes, that's actually accounting for most of that growth, right? So I don't, forgive me the number, but I want to say something like 60% of the volume growth is in like 0 and 1 day options, right? So that's not coming from institutional players, right? It's coming a little bit from funds, but it's mostly coming from true retail participation. So that's a dynamic that didn't exist when Zed and I started our careers in this business 20-ish years ago. Our firm is now 4 years old.
Right, and you co-founded this together. And I'll give you the final word here, because we also, people like to have a strategy for investing. They think it's a good economy, a bad economy, when the markets are going higher or lower. A final thought.
Yeah, I mean, again, ultimately, you got to figure out what the goals you're trying to achieve, and you got to make sure that the tools you're using to achieve those goals are providing the intended benefits that you're hoping for. So when it's risk-reducing hedging, make sure those tools are incredibly tax efficient and give you actionable liquidity when the nasty things happen. That's the point of the diversification agent. If you're using it for leverage, make sure it's a very cost-efficient leverage within the portfolio. And when it's, distributions, income type of category, make sure it's actual income and not just giving you your own money back.
That's a lot to take in, but it's such an important growing part of the market, as you both just explained to us. It's great to see you both. Zed Francis, Convexitas co-founder, CIO, and Devin Anderson, Convexitas co-founder, CEO. Thank you both for being with us and giving us more looks into options trading. Thank you.